Good morning. As we continue on, I said I'm going to be looking at some companies as we go through this. I'll maybe end up hitting everybody's company. I'll try to hit a couple today for you guys to have a look at. Um, Again, just to give you some ideas of what I look for. I have, I think, unless there's some that have been turned in just since last night, but I've reviewed everybody's outlines that have been submitted and given some feedback. Please read that feedback, okay? It's really, really important. If you need to, go back and review the video that I created, which was basically from last week. Okay, go back and review that. It's in the content section under week 11. It says outline, okay, where I talk about how to set it up, what the required elements are. The required elements are also in the assignment that says outline, okay. Make sure all those are in there. They are a requirement for the final paper, okay, so they all need to be in there. It should give you, the basic skeleton of your outline should not be difficult. Filling in the gaps then is where it gets to be a little bit more complicated, and that's kind of, we went over some of that. Again, even the basics of that shouldn't be difficult, but filling in the individual ones for your particular company become a little bit more important. So, company I picked today, of course, it's Marty's company, and he's gone, but oh well. I guess that's his loss, is Nvidia. Nvidia is a rapidly growing company. That's why we see the PE ratio at 66.23 probably, because it is fast growing. That said, I touch on PE ratio sometimes. They're probably irrelevant to your paper. Okay, that's just, I've talked about that more because it's kind of interesting. It is something to look at if you're an investor. But in terms of your paper, in terms of analyzing the basic financials, it's not really relevant. Okay, so some of these things I'll try to be more specific about what's really relevant and what is not. They are things that I kind of like to look at, okay, but not terribly relevant. The market cap could be, okay, $770 billion market cap. So it's not far away from joining the 4 or 5 companies that are over that $1 trillion mark. And I think, if I'm not mistaken, Google's not far from hitting the $2 trillion mark. Is it Google or Apple or both, maybe? Big, huge companies. It was only a couple of years ago that the first company breached that $1 trillion market cap. And now there's 4 or 5 of them that are in that category. Nvidia is getting kind of close. Okay. But we look at the financials. The basic quote I usually skip over and go right to the income statement. One thing that I think I said on a few of the comments that I got back is don't ignore the basics, okay? So yeah, I'm up here and I often try to look for things that I find intriguing, things that have been going on over the last 4 or 5 years maybe that, we gotta talk about this. But you also gotta talk about the basics, okay? And in Nvidia's case, look at their revenue. It's gone from just under $7 billion to, in the trailing 12 months, they're which is almost a year now. Their year end is in January, so January of 2021. So we're almost another year into this, but their revenues have tripled, right? That's a little bit more than tripled in 5 years. Okay, that's freaking awesome, right? For any company, and especially one that's got a $770 billion market cap, to be able to triple your revenues is huge. Okay, cost of revenue, I look at the dollar amounts and I see, okay, but I like to look at this because that gives me a little better perspective. And in addition to their revenues increasing, they've actually been able to decrease their cost of revenues, right? And as a percentage basis, that's like a double really good thing, okay? That's like an unbelievable, you're not going to see that very often with most of the companies that you look at, but we can see that with Nvidia. And thus we see their gross profit percentage has increased, and in a dollar sense we should see that. So, sales have tripled, their gross profit's gone from 4 to almost 14, so that's 3.5 times, right? this is unbelievably good stuff that we're looking at here, right? Research and development, general sales. Again, I kind of look at the percentages. Those have stayed, in the ballpark, a little up and down here. They had a little extra research and whatnot there. Yeah, I might look at it, see what's going on, but not big numbers. Keep things in perspective too. I was thinking about this the other day, or relative. Okay, a company, Jake's company, and I'm going to look at it in a bit, but it's Malibu Boats. It's a tiny company compared to a company like Nvidia, right? So Malibu Boats, if they have an acquisition, and I think they do, of like $150 million, that's a big deal for Malibu Boats, okay? If Nvidia had an acquisition of $150 million, I'd have a tough time even finding it, okay, in their financials. They might not even talk about it in their annual report because it would be tiny, right? It would be minuscule. So when you're looking at your own companies, look at relative things, okay? That's extremely important. We'll see that Nvidia's got some acquisitions, I believe, too. So again, I kind of toggle back and forth often between the dollars and whatnot. Interest expense, they had a big jump up here. Okay, that's just kind of got my interest peaked a little bit. They did have some other income here. Might take a look at that. That kind of bounces up and down a little bit. It may not be a big deal. Their provision for income tax had a big decrease there in 2021. Might have to take a look at that. I'm not sure why that might be. Looks like they had a loss way back in 2019. So I got to look at their income tax to see what's going on there. Again, these are relatively small numbers, though, for a company this size. Okay, so I don't get terribly excited about it. But look at their earnings per share. From 77 cents to 285, we're getting close to 4 times, right? 4 times. So revenues have tripled, operating income 3.5 times, earnings per share nearly 4 times higher than they were just 5 years ago. We all wish that we would have invested in Nvidia. I can tell you that right now. I'll bet you if we look at a chart of their stock price, it's going to be pretty impressive. Okay, their balance sheet. Here's where some things get kind of interesting. You got to, here again, keep some things in perspective. We got cash and cash equivalents and short-term investments, and there's some bouncing around here. These two are kind of interchangeable, though. So I'm looking at it, and look at that. They had $6.7 billion in cash and short-term investments, a little over 7.3. It did take a nice jump up here in 2020, but that's not terribly surprising. And it kind of looks like, they didn't have any short-term investments. Well, they flopped. They must have sold, they got government bonds or something like that. They must have sold those and actually had it as cash on their balance sheet for probably just at the end of the year. And then they reinvested. Not a lot. So if you look through and you combine both of those, there's really not a lot of change. Okay, and that's kind of important. We could spend a lot of time looking that up, but the truth is, it's just not. It's better to look at this total cash number, right? Okay, and that's just a nice increase. Not terribly surprising. Receivables have grown, but probably about in line. Yeah, it looks like about in line with their sales, right? They've tripled in the last 5 years, just like their sales have tripled. Inventories, similar story there, okay? So those things don't really jump out at me. Gross property, plant, nice steady increases there. They're obviously making some investments in that. Now I jump down to here, though, and I go 618. Holy cow, what happened here? In 2021, we had a jump in goodwill of $4.2 billion. What happened? Okay. Now I'm going to go down a little bit further. We also had a jump in intangible assets of $2.7 billion. And again, those were kind of a nothing, right? So, boy, there's $6 or $7 billion that have changed. It's I almost guarantee you it's an acquisition. Okay, so they made an acquisition last year, and we want to look that up, see what it was they bought. Maybe that's part of the reason for the big jump in revenue in the trailing 12 months, right? If we went back to that income statement, their revenue has been growing pretty rapidly anyhow, but it's $5 billion there in the last 12 months. That's a pretty good jump. So we've got something going on here that there was an acquisition. We need to take a look at it. Look at your Liabilities too, current liabilities, some ups and downs. Again, relative to the size of the company, there's nothing in here that really jumps out at me, but you guys may have an exception. Long-term debt, one reason I like you looking at long-term debt, again, this just reinforces the notion that something happened, right? Their long-term debt was just steady at just under $2 billion, and all of a sudden it's just under $6 billion. So they borrowed $4 billion to make an acquisition, I can practically guarantee you, right? Okay. And sometimes we want to come down here and take a look at what's going on. Not a lot. You know, they've added a little bit to their paid-in capital. That's new stock and whatnot, maybe that's getting issued or reevaluated. But let's take a look at the cash flow real quick, because that may, net income. We kind of glance up here. Some of these are ups and downs a little bit. I don't see anything. Okay, and I've already glanced at that. That's why I'm kind of rushing through it. I don't want to spend all day looking at it. But I can come down here and I got acquisitions net. This is trailing 12 months. This was last year when it happened, $8.5 billion. Okay, that just reaffirms what I kind of had already pretty well guessed at, okay, that they had purchased some kind of a business, right, some other business, some other company. We need to figure out what that is. That, along with the basic information, has got to appear in the report, right? Those are the things that I'm absolutely going to look at, when you submit that, okay? This gives me a good idea what happened, but I got to get some details, because I got to have details in the final paper. That's what I'm interested in. I'm not just interested in this general speculation, that they bought somebody. This purchase of investments, and there's some decent numbers, but if you go back, remember to the cash, the ups and downs of that, that's just a reflection of what happened there. How they went low cash the one year, boom, and then the next year their cash went up because they bought and sold some short-term investments in there. Although they had a decent jump up that year, that's kind of interesting. Come down here, we see their operating cash flows, net change in cash. Nothing, big decrease in cash here, okay, in 2021, yeah. But again, that's their cash, that's not those combination. And I'm more concerned about that combination of stuff that you see on the income statement. So you got to be a little bit cautious sometimes when you look at these cash flows. Okay. So there's a quick down and dirty look at Nvidia. Great company, it looks like. The other one I wanted to look at today was Jake's company. So Malibu Boats. Tiny company, right? Well, $770 billion was the market cap for Nvidia, $1.56 billion. Most of us would say we take $1.5 billion. That's a pretty good-sized company, but compared to Nvidia, this is just tiny, right? Their price to earnings, look at that, only 10.3. Okay, we got a little more traditional industry here. Not that they might be kind of fast growing in this and that in that industry, but it's a little bit more of a traditional industry, whereas Nvidia is in the fast growing technological sector, right? That's probably why we see such a low PE ratio. But we take a look at, up to the income statement. Holy cow, look at their revenues. $282 million up to just right at $1 billion. Hell, that's 4 times almost, 3.5. That's almost as good as Nvidia's. It probably is as good as Nvidia's in terms of the growth. Their cost of revenue, we got to take a look at that. Not as good as Nvidia's, because theirs decreased, but theirs has stayed pretty steady. It's some little bumps up here, but then it looks like they've kind of got it back under control a little bit. They've done a nice job with their sales, general and administrative expenses. That's a big deal. Look at that. It's dropped from almost 12 to 8.5. Okay, 3.5%. On $1 billion in sales, you start talking about some real money. Okay, and thus their operating income has gone from 14 up to close to 16. Right, kind of a nice bump there. Take a look, income before taxes, nice jumps up here just recently. We kind of want to take a look at what's been the cause of that, okay? Maybe everybody's just gone out and buying boats and paying extra money. Is it like cars, Jake? You know, cars are, you can't find a new car anymore, and so people are paying a lot of extra money for them, or anything like that, or yeah. People have really been taking advantage of that. Yeah, yeah. Oftentimes that's where the real profits are at too. Yeah, yeah. That could be why their margins are expanding a little bit. Look at their earnings per share from $1.60 to $5.50. Man, that's that is just about 4 times right there. So just about as good in terms of growth. Now here's one of those things. And I don't know what their chart looks like in terms of the growth. I'm guessing Nvidia is probably, their stock price has probably gone up more, but I'm not terribly interested in stock price. Again, I probably made that comment about at least on half of your outlines. I'm not terribly interested in the stock price, except maybe for your final recommendation. So the only time you should talk about the stock price is maybe in the very last sentence of your final paper, right? Okay, maybe the last couple sentences. But we got a company that's really, from a relative basis, growing and doing just as well as Nvidia, even though it's a tiny company. Okay, so size doesn't necessarily matter. My guess is, again, that the chart here is not going to be as good, but a lot of that has to do with that price to earnings ratio. Okay. Let's take a look at their balance sheet. Not not a ton of changes. They've had a few ups and downs in their total cash, but not a ton. We see some growth here in some of the current assets, again, the receivables and inventories, but that's kind of commensurate with what their growth has been in terms of sales and whatnot. Same thing, gross property plant. Looks like we had some bumps here, okay, that could be kind of interesting. Some intangible assets took a pretty good jump here in 2021. Their year end is June. So something maybe happened there. We're going to have to take a look at that, right? Huh? In 2021, both their gross property and plant bumped up, and as did their intangible assets. Okay, for their year end 2021, which is from June of 2020 or July of 2020 through. Well, we'll continue on and see. Yeah, something went on. They could very well have bought something that had some. What's goodwill and intangible assets? Let me get back to that though. What's goodwill and intangible assets? Because we saw that in Nvidia. You know, their purchase, they didn't add really any property, plant, and that kind of stuff hardly at all. But they added a lot of goodwill and they added a lot of intangible assets. Okay, goodwill is the difference in between the price and the book value. Basically, that's a pretty abbreviated definition of it, okay? But if we looked at the book value, and here we'll take a look here at this company, okay, their total stockholders' equity or their book value is $373 million. But what was their market cap? Remember at the front page, I showed you that $1.5 billion, right? Okay. So the difference between that 1.5, it was almost 1.6 billion, and 373 million is 1.2, something like that. Okay, 1.2 billion dollars. We'd call that goodwill. Okay, the market, we investors obviously think that Malibu Boats is worth more than the 373 million dollars, and we're willing to pay more for that. And there's reasons for that. It generally has to do with their cash flow and profits. Okay, they're growing profits, as we saw, pretty substantially, and so we think it's worth more than that. But the difference is 1.2. If you're buying it, you know what's that? You're buying $373 million in assets on a book basis. But what do you do with that other 1.2? That's what's called goodwill. It shows up on the balance sheet of the acquirer then, and then they basically depreciate that. They amortize it, is what that's called, as opposed to depreciation. They amortize that. They get to write that off over a period of time, that goodwill. Okay, so that's what goodwill is. What are intangible assets? Okay, that's important to know as you get into your companies because they very, very well may have some of those things. Those are usually the things that might be like patents, okay? Might be like trademarks, might be like copyrights, okay? Rights that a company has that certainly have some value, but they don't necessarily have a physical attribute, okay? Um, you know, the old brand, absolutely, yeah, yeah, yeah. You know, the old, you guys are all way too young, but you've probably heard of the group called the Beatles, right? I think that their songs, just their song portfolio is worth something like, last time I saw it, it was worth something like $500 million, okay? Again, there's no physical attribute to that really, just the rights to those songs. Not the paper versions or the albums, just the rights to those songs are worth that. Because they still generate a lot of cash, believe it or not. Okay, so then we come to cash flow. And this may affirm what we were kind of looking at, right? Again, we should look at these things up here, see if there's some things that, you know, really jump out at us. Not a ton. You know, they grew their inventory a little bit. They have been, but again, that's kind of commensurate with their, you know, with their growth in sales and whatnot. Investments in property, ooh, acquisitions. They actually had a couple of smaller acquisitions in 2018 and 2019. And then a decent sized one here in 2021. Okay, so they had a nice sized acquisition there in 2021. And so that's what we kind of need to take a look at, right? Other investing activity, that's kind of interesting too. Okay, yeah, yep. Acquisitions net. And the net probably has to do with what, you know, when you buy um, a company, you may buy cash. I mean, there's companies that get bought and they have a lot of cash on their balance sheet, right? And so the acquiring company accumulates that, but then what they have to pay out otherwise becomes the net negative for the cash in that case. So they reduced their debt repayment and took on some debt kind of as a result. Probably had something to do with that acquisition. Again, this a little smaller here, you know, even relatively speaking, it's maybe a little smaller than that one of Nvidia's. So we got to dig into this a little bit and find out what some of the details are. Okay, but that gives you a little. There's some things there to look at, right? There are a few things that kind of jump out at you as you look at your companies, and I recommend you do this. You know, just kind of scroll through it a little bit and see what jumps out at you, and put your hand up and say, "Is this important? Is this something I should take a look at? Is this something that's worth reporting on?" Again, a $150 million acquisition for Nvidia would be like, you know, that's like one day's revenue. We're not going to get too excited about that, okay? But $150 million acquisition or more, possibly for Malibu boats, that's a big deal, okay? That's even what 10% of their market cap, right? It's I can't 0.02% for it'd be the 0.02% of the market cap for Nvidia. Okay, questions about that? Questions about the outline that was due? The next part is your intro and conclusion, right? That's going to be due. Is that due this week? 18th? Okay. When you write your intro and conclusion, make sure of these things. I know I've said it before. I'm going to repeat myself because I know that probably half of you, I'll send it back and say you haven't done this, okay? You have to tell me what you told me, or tell me what you're going to tell me. So you're going to summarize in the introduction the main topics of your paper, which are going to be the history of the company, the industry it competes in, the strategy that it has, and a detailed analysis of the finances. Okay, you need to summarize those, and it can be in one sentence. That's fine, but that needs to be in your intro. Okay, in your conclusion, guess what? You're going to do that again. You're going to tell me what you told me. Okay, so you're going to mention those four things again. Okay, The intro and conclusion are not places to elaborate on those. They're places just to introduce them and to summarize them. That's not to say that if there are some important factors that you wouldn't include that. That's fine. You know, like we were looking at Nvidia, or Malibu boats, either one. We said, if I got to the detailed financial analysis, I might point out that, man, revenues have increased in this company by 3.5 times over the last 5 years. You know, I'm going to take a look at some other things in the financials that tell you maybe why this company might be a good investment. And that's okay. You could lead into that at the start, that you've already made that determination that this is a good investment, and now you're going to explain to me why. Okay? That's okay. You can put that in the intro. You don't have to keep me in suspense until the conclusion. If you've kind of already made that determination, you can put some stuff like that in the intro. But save the elaboration for the body of the paper. Okay? Other questions? You got some assignments due, and then you'll have that intro and conclusion, so make sure you put that stuff in there.